Hello and welcome to Podcast, the Business of Dentistry podcast. I'm Suki Singh, Area Manager at Practice Plan. Today I'm joined by Iain Stevenson, Head of Dental at Wesleyan Financial Services. And we're going to be talking about two really important topics for dental professionals: the financial implications of moving into private practice and the importance of having the right planning and legal structures in place when owning a practice. Thanks so much for being here, Iain.
Thank you.
To start us off, could you tell us a little bit about yourself and how you support dentists and practice owners?
Okay, so I have been in financial services for 35 years. For the last 24 years, I've been completely focused on dentists. We provide specialist financial advice to dentists, so I look after the division that provides financial advice to dentists right across the UK. Yeah, we've been doing that forever. I think one of the things that's really important is the specialism. Dentists want to know and need to know that the person that they're dealing with understands dentists and understands them, and that's what we're very good at. So yeah, I'm very, very proud to work with such brilliant people and such amazing customers.
Great, thank you. So first question, we're seeing more practices considering or moving towards private dentistry. From a financial perspective, what are the key implications dentists should be aware of?
So that it's a journey. Okay, so as you well know, Suki, when you're going from NHS to private, there's so many moving parts. And I think what dentists are probably guilty of is they put themselves last. Okay, so if they were to write down a list of things they're worried about in this journey, they're looking at their patients, they're looking at their staff, they're looking at how the practice looks, they're looking at their profitability, etc. So there's lots of stuff for them to work on, and what sits bottom of the list often is themselves. So we try and help get involved as early as possible, at least just to point out that the journey it involves financial implications for them. So a starting point would be you're no longer involved with the NHS, so you lose most of the NHS benefits. Benefits that you've built up until this point, you'll still have, for example, the pension, but you're no longer accruing benefits in it. So what you have to do is take a step back and think, right, okay, I don't have NHS benefits now. How do I replace them? So that's a financial implication. So you're looking at things like sick pay, for example. You don't have the NHS sick pay anymore. So what happens if you're off sick? What happens to your pension? You're no longer accruing benefits in the pension plan, in the NHS pension, although you still have what you've already paid into at that point. But you may well still have another 20 or 30 years of work ahead of you. What do you do? What should you do? What's the best thing to do? When should you do it? My concern with situations like this is it can often just be put off. So, okay, we have many examples where I'll give it 6 months and let the practice settle in, and that 6 months turns into a year, 2 years, 3 years. Now, the implications of that are what we call the cost of delay. And if you put off these decisions, the longer you put it off, the more expensive these things tend to be, because you're playing catch up. So if you've left it 2 years, 3 years, 5 years, you've then got to make up that difference really to give yourself the best possible retirement if you're thinking specifically of pensions. Also, you run the risk of if you're off sick and you haven't replaced the benefits that the NHS provided, then again, it could lead to financial difficulties for yourself and your family. So there's lots to consider. And I think that the best thing for anybody who's on that journey is to sit down with a specialist who really understands dentistry and help at least position some of this stuff. There's more. So there's more things to consider. There's also your practice and your staff, etc. There's also if you want to often try and redecorate and look at the aesthetics of the practice, where do they get the money for that kind of thing? So there's lots of things to consider when they're on that journey.
You mentioned one of the things there, Ian, about the delay and the implications around that. I suppose we could say that's a financial mistake that some of these dentist owners are making before they make any transition to private dentistry. Is there any other common mistakes that that happen during or before the transition process from NHS to private dentistry?
Yes. So I guess one of the other considerations is to look at things that you had in place, certain contracts that you had in place, perhaps with your associates, perhaps with your staff, might need to be changed, might need to look at them again. This is why sitting down and looking at an overall kind of holistic view of what's been affected by this change can really is vital, really, to make sure that the journey towards private actually works. Because at the end of the day, they're doing it for themselves, they're doing it for their practice, they're doing it for their patients. But if it only works for the patients and the practice and you've not looked after yourself, then actually it could lead to more issues in the future. So one of the other things that, going back to the cost of delay issue, is that hopefully one of the things they might have is earning more money. If the practice is more profitable, how should they take the profits out of the business? What's the best means to do that? So that really needs to be reviewed. The setup of the practice, should they incorporate, should they not incorporate? All of that really should be discussed as you're going through any change. So any substantial change like that, you're looking for people to review basically all of the financial planning. Just make sure that anything that touches that is reviewed, is correct, and is fit for the future.
It sounds like a lot of planning that's needed prior to making any sort of decision when it comes to, again, moving from the NHS to private dentistry. How important is that planning stage for somebody that's considering doing that?
Well, I think, like anything, you want to go into these things with your eyes wide open. And I think if you do this and you've not properly scoped out what all of the issues are, what all of the challenges are, then it'll hit you later on, and it might be a bit of a shock. So I think the earlier, it's like anything, the earlier you do this kind of thing, the better. I use retirement as an example. So again, you don't want people coming to you when they're 3 months away from retirement. But I want to just stop. I want to retire in 3 months. I want to sell my practice. That conversation needs to start 5 years before that. So it's another example of where the earlier you start that conversation, the better position you'll be in, the best informed position you'll be in. It's not necessarily even that you'll do things at that point, but at least you'll know, at least you'll be informed.
Great. And I think you also mentioned something about the NHS pension there as well in what you've just said. And, for somebody that's wanting to move away from the NHS, it must be quite a big decision just based upon that alone. So what are some of the biggest pension pitfalls they might not realise unless they get sort of like specialist advice, and how important actually is getting some really specialist advice when it comes to the NHS pension?
Yeah, so the biggest pitfall is not replacing it. You can't technically replace the NHS pension. It's a unique scheme. It's not something you can replicate as a private pension, just because of the nature of it, the guarantees within it, how it's funded, etc. It's an occupational pension scheme. But when you stop working effectively as part of the NHS, you have to replace that. So the biggest pitfall is thinking that, well, I've got my NHS pension scheme there, that'll do. You have to really understand what that is, because the funding, there's no more money going to it at that point for the rest of your career. So what does that mean to your life after dentist? What does it mean to your retirement options? So the biggest pitfall was just ignoring it. And it's not necessarily to say that you have to do any one thing, but you absolutely need to sit and look at it and understand what the options are. There are lots of options. The one thing for sure is when you get to retirement age, whatever stage that is, you'll need cash, you'll need income for the next part of your life. How much you need, you probably won't know, but you need to it can come from a variety of sources, but you need to at least consider what that might be. The most important thing around retirement is what you're doing with retirement planning is you're buying yourself options. you're buying yourself control of your own destiny. You decide when you retire. You decide what life looks like after retirement if you plan far enough in advance. So biggest pitfall is not doing that and actually delaying it for 5 years, 10 years, or not doing it at all, and then finding that you don't have enough money to have the standard of living that you want.
Again, such a massive decision, isn't it, for these owners that are thinking about moving or in the process of moving. And in terms of that specialist advice, again, that's really quite integral, isn't it? It's really quite important for them to get that, because you need that when you're making such a huge decision.
So understanding where income comes from in a dental practice, what it's made up of, what it relies on, is really important. Understanding that the NHS pension scheme that you've already built up to that point is a starting point. That's your base. And if you don't fully understand what the NHS pension scheme is, it's hard to then build on top of that. So you need to be speaking to someone who really gets it, who understands what's happening with your pension now that you're no longer contributing to it. So using that as a base, using that as a starting point, and then building from there. Understanding all the kind of idiosyncrasies around running a dental practice, the profitability, whether you're a partnership, whether you're a sole trader, whether you're a limited company, and what that means to income is really important. If you don't have someone who really gets that, then there's a risk that you'll make mistakes.
Great, thank you. Okay, let's move on to the second area, which is ownership structures and planning. For dentists who own a practice, either in a partnership or as a limited company, why is it important to have proper agreements and financial planning in place?
It's absolutely vital. I think the best way to describe it is to think about an example. And there's one that springs to mind that's kind of heartbreaking, where if there's an example that we know that there was two friends who they were best friends going through university, dental school, and had always, back then, they'd always decided we were going to have a dental practice, we'll run our own practice, etc. And 10 years later, they did. They worked their way through, they got their experience, and they eventually opened their own practice, and it must have been magical for them. Unfortunately, sometime later, one of them died. Now, they're best friends. They didn't feel like they needed anything in writing, or nobody suggested it to them, or whatever the situation was, but they didn't have any kind of agreement in place. And actually what happened, because it was a partnership, what happened is that the chap who died, his 17-year-old son then became technically a partner in the business. Now the 17-year-old son doesn't want to be a partner for dental practice. He's got nothing really to add to the value of the practice at that point. And certainly the surviving partner doesn't want a 17-year-old being his business partner. Therefore, it was a mess. And really what should have happened is, if they'd had the right kind of contracts and the right kind of agreements in place, at the toughest time possible, you can't imagine the emotional stress and strain that was on them at that time, but at the toughest time possible, at least you know that everything else works. So the practice should have transferred over to the surviving partner. The estate of the deceased should have received the value of the business because he's worked in it for all those years, and then kind of everybody moves on. Everybody's got what they need, and everybody moves on, and it doesn't take much. So having the right contracts in place is really important. Understand the implications that of not having the right type of agreements in place will really motivate you to take some action on it. But that in itself isn't enough. So you have to understand, what type of business are we running here? Do we want to be a partnership? Do we want to be a limited company? And if so, what do we want to happen if the worst happens? Now, they need to have that conversation. They need to sit down and understand what that looks like, and they need to have that in writing. So that comes in the form of a partnership agreement, or if it's a limited company, it's a shareholder agreement, and that's their opportunity to sit down and say, right, if I die, this is what I want to happen. If you die, this is what needs to happen. This is what happens to my share of the business. This is what happens to my family share of the business. Get all that in writing. But that's stage one. Once you've got that in writing, at least you've got the mechanism to make it happen. The next thing you need to underpin that is you need the finance to make it happen. So to underpin the actual agreement, you need to have what we say is to put the right money in the right hands at the right time. And that means that if I was to die, if you and I are in partnership, and I was to die, you get a lump sum, which you use to buy out my share of the business and buy out my estate, my family. It means you get to keep control of the business. My family gets their share of the business, and everybody's fine. So having the right agreement in place is one thing. Having it backed up with the right financial support, the right financial provisions is the next thing that needs to happen. And you can't have one without the other. Both need to be in place.
It sounds like that example that you gave there about the two best friends, it would have made a huge difference if they would have had that proper plan in place prior to that, to that happening, really. And the impact that must have had on the families and everything else would have just been reduced, I suppose, in that sense. So I can imagine it was quite a difficult time in that example itself.
Well, it's a difficult enough time without actually having themselves tied up in all of these legal knots and implications. And it's actually the biggest challenge that we have is trying to get people to see that before it happens. And it's not difficult to do. It's quite a simple process. It's literally similar to I guess, writing a will to some extent, where you're just putting your wishes in place before it happens, just in case it happens. Hopefully you'll never need it, but it's really good to know that it's there. And everybody should be doing it. Everybody who owns a business, who runs a business, should have this in place. But yeah, that's you can see if you use specific examples, and you can see when it falls down. That's unfortunately the best way to illustrate it.
Yeah. And for practice owners or associates listening to this, and they may be thinking about transitioning to private or reviewing the current setup, what would be your top 3 pieces of advice?
So the first thing is stop, take a step back, and sit down with a specialist who really understands dentistry. So, for example, one of our advisors would sit down and look at them as an individual, but also them as a business owner, and look at the implications of, if we often plan for when things go well, when I get to retirement, when I build this lump sum, when I move house, when I buy my boat, whatever it is. Things like that we're quite good at planning for, but actually what we need to think about is, what if it goes wrong? So sitting down with somebody who really gets it and understanding, so if something goes wrong within the family, right, what do we do about it? If something goes wrong within the business, what do we do about it? So that's the first thing I would say. Sit down with somebody and say, right, tell me where I am just now. Second thing is, develop a priority list. You can't fix everything at the same time. But understand, again, speaking in conjunction with your specialist advisor, understand what's the most important thing. Get that right first. And work through your priority list. And then the third thing is the easiest one of all, but can often be the most challenging, is actually take action. Take action on it. Okay, we've agreed in principle what we would like to happen. We know the current situation. We know what you need to do about it. Right, go on then. Go and do it. And if you don't mind, if I can just round it off with a fourth thing, really, they have to review it. Okay, it's really important to, whatever's right for us today might not be right for us in 3 years, 5 years, 10 years. So you have to constantly review and just make sure it's still fit for purpose.
I mean, talking about the right time to start planning and looking at these sort of things, it sounds very much like it has to be done as early as possible, really, and not to leave it too late. The consequences of delaying things like this can quite instrumental in terms of the things that happen after that. So how can Wesleyan Financial Services help?
Well, the fantastic opportunity that we've got, or the privileged position that we're in, is that we are surrounded by fellow specialist professionals. So we work closely with specialist accountants, specialist solicitors, specialist estate agents, etc., who we work hand in hand with, and we create this thing that we cheesily call the circle of trust. But it's really important if you can picture the business in the middle, so that the clients in the middle, if you like, the dentists in the middle of this circle, surrounded by all these professionals. So if you've got a financial planner who is working with the dentist, we can't do the contract, so we need to lean on a solicitor. The solicitor can't do the financial aspects of it, so they need to lean on the financial planner. The accountant needs to be involved to make sure the business can afford it, and how is it going to pay for all this stuff. And then as they move towards retirement, or if they're just setting off and buying a practice, they'll need a specialist dental estate agent as well. So where it works is that if we work hand in hand, which we do with these fellow professionals, it gives it the best possible all-rounded experience for the clients themselves and the dentists themselves. They know they've got people who understand dentists, they understand them, and we're all working together. It doesn't work if we just do our part, or the solicitor just does their part. We all have to work together.
Great, thank you. That's been incredibly helpful. Thank you, Iain. I think it's clear whether you're moving into private practice or you're already running a dental practice, having the right financial planning structures in place is very, very important. Thanks again for your insight and your expertise. And thank you for listening. And we look forward to the next episode.
Thank you.